All right. Cool. Thank you, guys. My name is Ben. I'm the co-founder and CEO of Bybit. I have here Eugene and Yoann from Wintermute. So, guys, thank you for joining the show. And this show is really for Bybit just to kind of sit down and chat with our biggest partners and get some feedbacks, and also hear your perspective on the industry and on the Bybit product overall. What can we do to do it better? What things are lacking? I think this is a really good opportunity. So today we have Yuhan on the show, and Yuhan, maybe you want to do a self intro.
Yeah, glad to be here. So I'm also co-founder, such, but on the Wintermute side. We started the three of us in 2017. So Yevgeny, Haro, and I. Yevgeny, you've met before, my co-founder and CEO. And I have this very foggy title of co-founder as such, which means I do a lot of top of the funnel things that
What's the title?
co-founder simply.
Okay. You don't have any
Overlap.
actual.
No, I have been. I was earlier head of trading, which was much more of a head of ecosystem. So I was looking good. So you guys know from the exchange perspective that essentially there's still no real prime broker in the space. So essentially, I did all the things that we needed to connect directly to exchanges and do the financing. So prime broker usually gives you some financing and gives you access to exchanges, and that was a big part of my role. And Yevgeny was more the CPO / head of trading at the time when we very much started. And later, my spikes being more on the. So I traded for about 12 years, but basically my spikes have done a lot of commercial activities as well. So I ended up becoming the head of business development as such, a role that Jonathan, that you've probably met as well, that took over about a year ago. And I started to do the new things. We started with Yevgeny making venture investments as well. So I was doing a lot of the venture efforts from 2020. And we've now hired another, more like a venture director in 2022. So I tend to do more and more of the new things such as a co-founder. So go and spend time I went to spend time in South Korea for 3 months. I've now moved to Singapore. So I'm now essentially leading the Asian expansion. So I like this title to be kind of foggy, but the way I summarize my role is maximizing optionality for the business. So wherever I can be the most useful, I do that.
Awesome. Again, the reason I'm doing this show is for me to get to know our partners. Eugene is out here is obviously our head of institution. He talks to you guys a lot, and when we had idea, we were like, okay, what do we want to do with this show? I'm like, well, it'd be a good opportunity for me to get to know our partners. Because I think even Wintermute, you guys have been trading since when have you been trading with Bybit?
Since like, I mean, at least since when I first did join, that's 2 years ago when I first joined. I remember when we launched the spot in July 2021,
Mhm.
and the Wintermute are the first batch of market maker.
Mhm.
Yeah, that was like, when we basically just start from nothing, like trading maybe like 1-2 million
$2 million
a day.
a day.
Yeah.
Yeah.
I mean, I think today right now we probably trading over like billions. Like, yeah, I think our market shares probably is like about I think more than 10% overall right now.
Yeah, of the total crypto volumes.
Yeah,
Do you know?
for spot.
For spot.
For spot only. Yeah.
Okay. Yeah, it's quite impressive as such.
Yeah, with your support. Yeah, I remember like you guys we've been talking about different kind of coins and then the liquidities you can provide for us, especially for a lot of auto coins.
Yeah.
You guys are very
Were you
specialized.
guys skeptical initially because Bybit has always been at the time a derivative exchange, and then we are announcing a spot market. Was it just is it business as usual for you guys to connect to all the exchanges, or did you see some opportunities there?
It's usually good if there's already a derivative exchange. It's usually good because you can hope that people do some form of arbitrage, between perps or futures and spot. We are mostly a spot shop still, so very much we've grown to be the largest essentially market maker in spot crypto. so anywhere between say 15-25% of the total volumes. We had larger, nominal volumes in 2021 when you guys started, but with much lower market share. So I think it's also a function of the space that has, at least spot volumes have gone down a bit. But that's part of the environment. And it's true that we were covering a bit more tokens, to be honest. Like we're covering up to like 330 tokens at early 2022. And we've refocused a bit more towards the blue chips, but it comes and goes with the cycles, to be honest. Like next bull as such, I don't know if we're in the spring now or just like it's a big question. But we'll re-expand again. And it's for us it's not really a regulatory question, it's more about sort of cost of capital really. And just thinking of where do we grow the easiest, essentially.
When we start the spot, you guys are very active in the project market listings. I remember like there's the first 10 of project listing on Bybit. I think you're the number one market maker for almost like 5 of it, right? Are they still the main business direction you guys doing right now?
We want to make sure, so that's part of my role as well, Ben, you were asking, to make sure that we do market make for the tier 1 projects as such. There's two big directions in the business. There's also a big direction in terms of growing the OTC part of the business. That means we signed, I think we announced a few months ago that we signed about 1,000 counterparties as such to date. It used to be 5% of our volumes. It is probably closer to 20% of our volumes these days. And we also continue to focus on infrastructure building, essentially. So there's a lot of DeFi infrastructure building. So covering more chains and doing, it's similar to altcoin coverage. It recentered around chains, so it's very Ethereum mainnet, Arbitrum, Polygon driven with like a few other L2s. We're quite active. We're quite nimble. It's just very much where the volumes are. But there was, Ben, you had the question of like when we started or when we started integrating with Bybit as such, is it's a big bottleneck for our business tends to be integration effort. And I had pretty good feedback from my team actually on your API and so on that was quite intuitive. And where the few small points where it's not intuitive, your team was supporting was actually pretty reactive in explaining why and helping out. And if my team is happy, it's a very good sign because they tend to be unhappy in general because everything is fully automated. So we tend to be a lot more demanding than other teams. Anywhere between tracking positions and transferring funds.
I'm sure in the beginning probably you ran into quite a bit of issues, and you probably helped us a lot improving our APIs, especially for the spot book and all of that. Yeah.
No, thanks. It's the feedback from my team was quite good. I'm never really involved in the nitty-gritty of the integrations. I'm often involved in navigating, other exchanges, teams to make sure that we speak to the right persons, also essentially doing some of the problem solving or who to speak to solve these problems. And I didn't have to do it with you guys, which means it's good. I think there was also good feedback on the UTA as such. Not many people do that, so the unified. Don't know if you want to.
One of my interaction, like whenever I hear Wintermute, is when we have new token listings. Whenever a new token is listed, I will ask, "Hey, who is the market maker?" And that's gonna help us supplying and doing all the initial launching. And Wintermute comes out quite often, and that makes me very curious because we are not in that line of business. But like, do you have like a army of BD people contacting these projects, and how do they just know? Is it because there's already enough momentum, they just come to you, or how does it work?
So it's purely it's purely reputation driven. So we really care about reputation. We really care about being a good agent and doing and delivering on what we promise as such, which is essentially just completely market neutral liquidity. There is a lot of reinforcing like a virtuous cycle as such between us doing a good job with exchanges and having pretty reasonable market shares and having 10, 15, sometimes up to 50, 60% market share on some exchanges. So these exchanges know that we do a good job. Then these teams go and apply to an exchange for a listing, and then they realize, oh, we need to speak to a market maker. And then if I think that's, to me, my perception of the main value proposition we have to foundations is essentially making it more easier for them, or simply just more likely for them to list on a good exchange. And it's not a silver bullet, but it's very much just the comfort that an exchange would have on knowing that we are in the order book, and it's just a question of like good infrastructure. So there's a small but mighty BD team as such that where partly the co-founder and CEO is also part of, and anyone who's very much externally facing is part of BD essentially. You could even put the venture team in there, to be honest. And it's more about we're much more there for inbounds than really like going outbounds. Yeah, it's more about just being reliable and being there in the market. I would say there's also an aspect of on-chain, what I like to call on-chain marketing, where people know that we've been quite active in DeFi, and then just see the wallets. That's the second aspect. The third aspect is more around, let's say, us being much more builders than traders. I think that comes across quite well with foundations. And we mentioned sort of the centralized exchange, like the example of integrations, but there are quite a few tier one. Let's say if you're an L1, we don't want to be kingmakers as such, but then there's a dimension where if we do integrate with the chain, it will naturally there will be more activity on that chain as such. So if you put these things together, it does help the business. So it's more about us making sure that we do a good job, and then we try to filter through sometimes a lot of noise as well, because we mostly deal with inbound. So I think you guys have the same issue where we try to if you're thinking of listing new projects, you probably have to prioritize quite a bit on who you list. So but yeah, that's the short answer.
Yeah. No, it's good. Whenever we see Wintermute, we feel more comfortable that we know that probably, at least on the liquidity side, on the token listing side, we don't have to worry too much. It gets a bit scary when the project gives you a completely random name you never heard of. And we're like, wow, who are these guys? Are they have they even integrated onto Bybit yet? And then you kind of worry about if they're gonna do pump and dump and all that.
No, and we stay really far away from them, but also people often forget. But when we deal with a project, we borrow their token, but we also so it's just debt to us. It's a loan to us, so we need to pay that back at some point, or we need to buy those tokens out from the teams.
But
But
do you
also,
take payments in the token itself, or you take different form for your service? Yeah.
no, we take a form of, it's essentially a commercial deal where we have we form of call option on the, so we can either reimburse the tokens, just send the tokens back the same amount. Sometimes there is a small interest, sometimes not. Or we have the option to buy, not the option, but not the obligation to buy that, but usually at like a substantial premium. So the art there is just to find a good alignment where commercially there's a good, where everyone is happy essentially. But also,
yeah, sorry. If you do that, doesn't mean a lot of your service is done free, because if the project doesn't do so well, especially in the current market, at least for this year, 2023, you probably did quite a bit of charity work.
It's worse than this. It's worse than free. It's actually costly, which is why to your point, like we have to be quite selective with projects. It's worse than this because we have a cost of capital on the other side as well. So when you quote, you don't only quote token XYZ, you quote XYZ versus don't know USDC, USDT, sometimes fiat, and so on. There's a cost of capital to that. That's not cheap. So often this call option is much more just simply a compensation for this cost of capital, to be honest. And 9 times out of 10, it is for free, and then you just hope that the one time that when it works, that it does cover enough of the cost of capital for the others. So you're completely right, which is why, yeah, I mean, beyond that, there's other aspects, but I would say just on the cost of capital, like we need to make sure that there's sufficient exchange footprints as such, that there will be sufficient, volumes as such, and it's that we can't decide. We don't decide any of the volumes, so it's much more about us, guesstimating how many exchanges. It's sort of the scope of the token, after 6, 12, 18 months or so. So often it's just probably much like you guys do, is vetting a bit of vetting on the team as such, and the last aspect is we also bet our reputation every time we go and associate ourselves with a project, for exchange listing, for example. So yeah, we try to be quite careful with that.
But have you ever get a call from like a owner company like, how come my token value never go up like 20%?
Then it probably means that we shouldn't do it. No, it's but it's sometimes it's true that it's one of the reasons why we very much start to use the and then we continue to call ourselves more liquidity providers as such, that market making has been given just too much of a bad name over the years, especially in Asia. People too confused about what market making was. So, and the liquidity provision, it's also confusing because in DeFi, LPing as such has been associated with passively providing liquidity, so it's not always helpful. But I would say we very much stick to our guns in the way that we will stay more market neutrals, and we don't deviate from that. When people ask, why is my token not going up and down, so well, it's more like it's for the team to build more product, to generate more interest around the token itself. I mean, what we're here for is very much to just help the market to define the exact price. We're just there for price discovery, essentially. Yeah. We're also there for price propagation as such. Specifically, if there's a token that trades at X on Bybit, it should trade the same price everywhere. So if it doesn't necessarily trade the same price, and DeFi and so on, we should make sure that there's no arbitrage opportunity. And it's just that's very much part of our role.
I assume you also trade on DEXs and provide liquidities there.
Yeah. We used to do up to, I don't know where the percentages are, but we used to do up to 50% of UniV3 of the volumes as such.
How is that compared? How is that compared to trading on SEX? Because obviously on Bybit you can get all sorts of tools to help you. Like we have all these institution loans, UTAs. But I assume if you just trade on Uniswap or 1inch, you need to put actual hard capitals there, right? And I mean, I guess it's the same game. Is it more difficult, to trade there, or how's it like? Yeah.
It is difficult enough that we have different teams. That we have we have a CFI trading team. That's probably more closer to what a traditional finance.
But in terms of opportunities and money being made or profitability, is DEX becoming a good area for you guys, a good business unit compared to SEX, or is it still quite small? I don't know.
I think in terms of volume, it's always been small. Like the bigger days of 2021 was 90% of the volumes would be CFI, 5% would be OTC, and 5% DeFi. It's very seasonal. I think it was really good that we were in DeFi from 2019. so mostly with UIDX at the time. But it's essentially, it's not always about P&L, like direct P&L from a certain token on a DEX. Sometimes it's a bit more unexpected things, like I would say we benefited from DeFi experience, but the C5 aspect of the business benefited from DeFi experience because it just helped us with a lot of transfer automation, for example. So tools out there, but essentially, I don't know if you want to name a few tools out there, but essentially, like the Nansen of the world, also that like to track smart money as such, and then they look at our transfers, and then basically they just, uh, they just see 10,000 transfers, and it turns into noise because it is noise. We trade very much market neutral. So if we buy something on one side, we do tend to sell it on the other side, and vice versa. So it's the DeFi team or the smart contract developers they help. There's other aspects also, like secondary aspect, which is not necessarily just about pure trading P&L, but the DeFi team is very involved with a lot of venture investment due diligence. So we end up interacting with a lot of VC friends also who want to have an opinion on our team. Not only in terms of obviously potential integration in us really trading on those dexes and so on, but also just simply in terms of just general quality of the team and general quality of the code. So there's a few more secondary effects to the business that are pretty tangible. And then the first degree of like, oh, there's more P&L coming really from DeFi. It's not that obvious. Like it tends to be quite seasonal.
But I guess when it comes to DeFi, it's not only about trading; it's about opportunity discoveries. Do you see a new team that maybe through a scientific way you can see there's a growing interest in certain areas, and then you can somehow make some investment and maybe profit from it. So it's not just a simple trading strategy, right?
So it was more the case 2019-20 that we did do that, and then it guided some investments and some trading opportunities. It's less the case sadly nowadays, or good and bad reason. The good reason is that we grew quite big, so but the bad side of it is that we grew kind of too big to look at the sort of bit of this white noise. And I think that's what we're referring to, like in terms of like identifying a small altcoin, for example, that would be doing well or would have interesting activity in DeFi. As I mentioned earlier, like cost of capital and cost of infrastructure comes into play, and then it's just it needs to become really quite big to become relevant to move the needle at the business level. So it's but it used to happen more. It's true that it used to happen more since 2019-20.
Yeah. Okay, that's interesting. Yeah. Okay, very good. Man, do you have some feedbacks for me about Bybit? Things you want to see happening, or things you think we did right in a good direction, or things maybe we could have improved?
Normally I like to bring bad news as such, and then just be quite diplomatic about it. But then I only heard good things from my team, so it's a bit. I know there was. I mentioned it earlier, so there's really good feedback on intuitive API as such. I think you guys are quite clear about the direction, and when there are changes at the exchange level and so on. I think it's quite clear about where you're going. As far as I know, the back end is quite stable and more stable than other exchanges, which is really, really key for us because when you run a fully automated infrastructure, you don't want to go and have to restart things just because an API or certain exchanges is not responding. So all these things are pretty good. I mean, all things we mentioned cost of capital, so all things that revolve around the unified trading accounts and so on. That's really, really useful.
Yeah.
So it can help us lower cost of capital essentially.
Yeah.
That's those first degree help for the business. I think just curious about. So I mentioned we're growing the OTC side of our business. I mentioned very much that aspect. I don't know is there a plan for you guys to start, more of an OTC desk as such, or like some of your competitors have?
Yeah, I can. I think the overall direction of the company. I think, especially after falling of FTX, we really committed to build the whole unified trading account because
Mm-hmm.
we felt that was something FTX. At least from talking to all the FTX trader, that's one thing they loved is that any token can be used as margin to trade everything. And we were like, let's fucking build it because it's time. Because if FTS falls, these guys need a new home. So we pushed the team internally to really build it, and now I think it's clear that this is a direction we're gonna go further. We want to be the venue for more professional traders and for all the institutions, and we have a lot of the institutions, the big players trading on Bybit. So we want to focus on efficiency and also making sure that you have that capital efficiency to trade. Recently, we opened up our Earn product line. So we do have quite a few institutions providing the underlying trading or the underlying product support for the Earn product that makes the yield for our clients. So the dual asset, the recent released double win, which is essentially leveraging our option book and perps book. So that has been all been done by third party institutions like you guys. So if you're interested, that's one thing we can also work on. Yeah, and again, OTC I think is one area that Eugene has been asking. I think this is something we can explore for sure. But anyways, I think gradually centralized exchange are becoming more and more on a competitive level, professional, and making sure that we are the ones providing all the financial tools and stable tools for all of you guys to trade, and that's kind of the overall direction that Bybit is going to take. Yeah.
So for the OTC trading, I think the way how we see it, like the value we can add, is like we can become a very good uh, central counterparties, like a CCP, right? Because like we are not good at providing the OTC liquidities, right? You are good at providing liquidities, but we are good at like to serve as your back-to-back trade, so that you can trade directly with our client, but you have to without worrying like the counterparty risk. You face them directly, right?
Just
I
across
think
the
yeah.
cross.
Yes, so that right, so I can bring my client to you. You don't have to like do the separate KYC onboarding with them, right? Because I already did the KYC onboarding with them, right? So you can trade directly with them, but you can settle with us.
Okay, so
So
block trading as such.
yes, so that's the key value add that we believe we enter into OTC trading.
And that would be for any products that trades on exchanges as such, on the exchange as such.
Yeah, I mean we actually have a little pilot program going on in the OTC spot. And then we would definitely will try to expanding into the derivatives and options, right? But we will start with the spot.
Yeah, so that fits. These things tend to fit really well with the UTA.
Yes.
So you really just end up with everything in one place. And then in terms of like product development, you guys are looking at options more and more.
Yeah, we
Options, we have pretty much already built the product. Yeah. We would like. I think that the mentality. A lot of people come to me say, "Hey Ben, you want to build this, trying to compete with Deribit." But I mean, it's not. It's because I think that the future direction, the industry is going to have more volume on option. I think due to a few reasons. Number one, it's probably new players coming in. So if it's only for the existing market, I wouldn't build the option book. But I think there's going to be more and more professional option trader and institution coming in. So we want to leverage our liquidity on the perpetual contract, especially UTA portfolio margin. So I think there is a competitive edge to build that. Second is I think because of regulation globally, the perpetual contract leverage will drop gradually. When you drop that leverage on a perp, option will become a lot more attractive. And I think actually the high leverage on perps causing the market on option not so big. So just kind of building for the future, and because of that, we have the option book now. There's a lot more earn product can be offered for our clients, which is very interesting. So this is another thing that's, I think, a good thing that's for our retail clients. Yeah.
Yeah. So I mean, to comments on that, to expand on this. So one thing is, I mean, you probably know that I have a past as an option trader in TradFi, and essentially in traditional finance, like option volumes are about 25% of the total volumes. It's really not the case in crypto. It's about like sort of half,
Yeah.
but it's very low single digits. One of the reasons, to explain this is that traditional finance essentially, and so one of the reasons to explain this is that in traditional finance you have essentially a whole ecosystem around option trading that starts with banks that typically just pitching structured products and so on to their customers, and then basically the bank's desk has to hedges options with vanilla options and so on. Typically more the options that you that would quote on your exchange and such, and then you get this whole ecosystem that's that there's just and then the options need to be hedged with futures or perpetuals in our case. So you get a lot more, just a lot more mature like ecosystem around option trading, and it just needs to be that all these things are not there yet. So as you said, there's new institutions, there's new people coming into the space, and they most likely will look at derivatives. Most people who could have traded spot before now would have already done it. So most likely the new entrants will actually look at derivatives. And
Yeah, I mean, I mean, but if you look at, I agree completely. First, but if you look at also how perpetual contract and the whole infrastructure for centralized exchange trading from 2017 to now, we're completely in a different ballpark, right? All of the infrastructure, at least from exchange perspective, is a lot more than what we had before. So I think that the option, ecosystem will happen, and what's really different from this round than last round. It was the last bull run. Everyone was focusing on the perps, but now you can see them. All the major players have option market. So I feel like this is definitely one of the directions, and at least I see Binance has it, OKX has it, we have it. I mean, last bull run only Deribit have it, right? So I think that's what's to come. Is the builders are already putting efforts and attention into that whole market. I think that's going to be.
I mean, about the options, so right now the majority volumes are BTC, the main coin, BTC ETH. So what do you think about the altcoin? Do you see any opportunity in the altcoin options?
So we tried OTC 26 underlyings.
Mm-hmm.
So there's demand.
Okay.
But it's quite like to bootstrap it, to have it on the screen, it tends to be a different ball game.
Yeah.
So it probably explains why, like without showing too much on Deribit, but I was told Deribit had around 2020, 2021, where one of the parts of the pitch was essentially them expanding really the underlyings, and it's still not there. So there's probably a reason why they just stick to the few coins as such. But someone will crack it, and then as the market grows, there will be there will be more demand across it just to bootstrap liquidity across altcoins. So there's demand. But I would say on the way you look at it, Ben, on growing options, I think the reason why Deribit has been more of the winner is that until now is that it's just because of concentrated liquidity. So the way people mostly trade options is that very much a lot of option positions just hedge each other, and then you go and hedge it with either spot or futures or so, but then you really gain in the derivative space, but particularly in options, having the best margining possible and the most efficient capital. You'll aggregate a lot of the flow, and so there's more conversions to one or a few exchanges in the derivative space than in spot. But as you guys have like the first very good stepping stones to that because of already the UTA on the perps, but perps and spot also. So you have all the ingredients to make it work for option trading to grow.
Awesome. All right, man. I think we're gonna wrap it up. It was really nice chat.
Like,
Yeah, and hopefully to see you next time in person. Maybe we have a chat as well.
yeah, why are you these days?
I'm in Singapore and Dubai. So I just in Dubai until last week, and then I came back to Singapore. So now I'm in
Okay.
Singapore.
It was a Monday. You kind of just missed each other. Yeah, he left on Monday, and then I think we
No,
met in like.
if you come to Singapore, let me know. Yeah.
I mean, I've now officially
He
moved
live
to
in
Singapore, so now finally. But I travel a lot. But I'll be in Singapore next week again, like so we can grab a coffee and
Sounds good. All right, man. Thank you for all the support. Anytime you need anything from us, you let us know. Thank you.